How to use the Relative Strength Index, a great indicator for investors in the stock market. In this video, I'll talk about how to use the Relative Strength Index or RSI to generate profits and avoid losses in the stock market by knowing two ways of using it. The RSI is a very popular technical analysis tool among people who invest in the stock market. It's useful to evaluate if a stock is oversold or overbought, by thus suggesting when is a good time to buy or sell a stock. It also suggests whether the stock market has become too pessimistic or too optimistic. So here's how the RSI works. The indicator goes from 0 to 100. Traditionally, the RSI fluctuates between 30 and 70. So the first way of using the RSI is by interpreting the oversold/overbought signal. If the RSI goes to 30 or below 30, it means the stock could be oversold or undervalued, which can be an opportunity to buy the stock, as the price could go up. On the other hand, if the RSI goes to 70 and above, it means that the stock has entered the overbought or overvalued territory, implying that a pullback could occur. This could represent a good time to sell the stock, as the price should go down, just like we see it in this example. So the idea is to buy when the stock dips into the oversold territory and sell when approaching the overbought territory. Sometimes, if the market is in a very strong uptrend or bull market period, you may want to consider raising the upper level to say 90, and the oversold level at say around 40 or 50. Conversely, you should also consider lowering the upper and lower levels from the traditional 70 for overbought and 30 for oversold during a strong bearish trend. In other words, an overbought reading could be around 50 and an oversold reading could be around 10 or 20. Just like in this example from the recession in 2008. But in general, keep in mind that the traditional RSI levels are 30 for oversold and 70 for overbought. So now let's talk about the second way of using the RSI. Besides using the oversold limit to know when to buy a stock and the overbought limit to know when to sell a stock, there's also another strategy called divergence. The RSI basically follows the stock price most of the time. Whenever the RSI doesn't quite follow the stock price, that means that the trend could be reversed. Let's see an example to explain it better. Say the stock price goes down, then goes up, and then goes down again, reaching a new low. You can see that even though the price of the stock reached a new low, the RSI didn't quite follow the stock price, as the RSI shows a higher low than its previous one. See the two yellow lines? See how the line supporting the bottoms of the stock price is a negative slope, whereas the line supporting the RSI forms a positive slope? Well, that's usually a good sign, as it tells us that the trend could be reversed. As it actually did. That's a bullish divergence. It's a great way to know if a bearish trend is going to end, providing a great opportunity to get in before the stock price goes up. Conversely, the RSI can predict when an uptrend is actually unsustainable. Say the stock price reaches a new high, but the RSI doesn't quite follow, meaning that the peak of the RSI is actually lower than its previous one. See how that line placed on top of the stock price peaks forms a positive slope, but when placing a line on top of the RSI peaks shows a negative slope? Well, that's a bad sign, as it signals the stock price could go down, as it actually did in this example. That's a bearish divergence. It is a useful sign that allows us to stay out and wait for better times to come. Remember, the RSI is a popular technical indicator that can really be useful to let us know when to buy a stock, when to sell a stock, or even when to refrain from buying a stock. However, the RSI should always be used in conjunction with other indicators. You should also consider company fundamentals, including the Altman Z-Score. There's a link in the description below if you want to get the Z-Score for any stock. Also, you'll have access to other useful information. Hope you find this video useful. Thank you. Have a great day.